Is Tesla a pump and dump? How favorite stock cannot be a pump and dump. I mean, if it's a pump and dump, why didn't they dump on this pump? I mean, why is this not this is barely even a retracement, and how can they continue to pump it up if this is a pump and dump? Well, that is because Tesla is not a pump and dump, but it is a pump and dump. And what I mean by that is because Tesla is a legitimate, strong company with legitimate fundamental, legitimate growth, but the pump and dumper hijacked it, took it over, and got control of it and manipulated and got it so much hype that everybody's in it. I mean, I'm sure everybody, every fund manager's portfolio has Tesla. Every investor has Tesla. Everybody who's in the market has Tesla. There's no way around it. So it has a lot of hype, a lot of visibility, and a lot of pump. And so now this is a pump and dump. This is no way. The people who was trying to ride this wave up and buy and manipulating it or advertising it or controlling it, and all the way at the top, all the way at 537 in the pre-market, that's when it started to sell off because look at Fibonacci. I mean, you can't make this up. If you line the Fibonacci, if at the at anywhere here, if you line up Fibonacci and you pull it up to 500, these lines would be already formed and they would be in. You can look into the future and you can say, well, here's the 38.2. The 38.2 was always going, this level, this level was always going to be the 38.2 retracement of the Fibonacci. They knew that when it was going up, that at this point of retracement, that if you forward look and put the top end of Fibonacci at 0, at 500, it would form 38.2. I mean, the math works that way, okay? At the point here, when they were pumping up, they knew at certain level that if you forward looking, and place the top point of Fibonacci at 500, exactly find up, it lines up here. And that is why this was a capitulation top. They capitulated top because they knew this was a reaction level. And they knew potentially that there was going to be a retracement. And then they continued the pump. And they knew to get it up to 500 and in the pre-market 537 because Fibonacci lines up. I mean, you can't make this up. Look at how if you put Fibonacci from the end, from the low point, peak to peak, from the low point here, and you drag it all the way up here. I'm not making this up, right? Here is the low point. Here is the high point. Fibonacci lines up exactly where 38.2 lines up with this level, lines up with this level, lines up with this level, and line up with the 50-day exponential moving average. This is not a coincidence. This is all forward looking. This is all math that was already predetermined. It was already predetermined at this point that Tesla was going to 500. It was already predetermined that they're going to dump it. And it looks to me like they're going to dump it to 38.2. Why wouldn't they? I mean, if they engineer it up here, why wouldn't they dump it at 38.2 retracement? And can it go to 50-point retracement? Of course, but you don't know. You just know that this is the first target. This is T1, first target 38.2. So whatever movements you have here or here, I mean 5-day moving average here and here, what I am seeing is essentially this. It's gonna have some wicked movement, and you're gonna see the 5-day moving average going down, of course, and it's probably gonna hit somewhere along the line. It's gonna hit the 5-day moving average, but and maybe even penetrate it a little bit, right? I All I'm saying is this level, boom, 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 will be the intermediate target, and it may even penetrate a little bit before it's gonna have some recovery. So at this point, it may penetrate a little bit, and then it'll go back up. And maybe at this point, it will hit the 5-day moving average. So let's look at the five. Let's just estimate where the 5-day moving average will be, something like that. And then it'll wiggle here. Let's just use a red pen. It doesn't matter. It will wiggle here and then move up some more. I mean, it gotta move up. Tesla has too much hype. It's gotta move up. Now, how far will it move up? I don't know. And this time scale, I don't know. This might take a month. However, when long this is gonna take, it may be a long time, but eventually it's gonna move up. Eventually, it's gonna move up. Or it might even penetrate this level down here and then moves up. So it doesn't matter long term. I mean, no one is looking this forward out except for the people who can manipulate it. All you know is at this point, based on what the data is showing you, the 58% retrace, I mean the 38.2% Fibonacci is the target, and that is 336. That is pretty much at this level, 336. Okay, so 336, 336. That is the target. Um, so if you are playing the long side, you are trending incorrectly, in my opinion. Now there's gonna be some movement. You can see at any point here, and I'm not gonna even draw the meat or whatever this is, the body of the candle. I'm not even gonna draw the body of the candle because it is unpredictable. The point being that there will be wiggle, tremendous wiggle anywhere in these. These range are gonna be huge. So you can play the upside, it's just you are counter trending. To me, the trend looks like it's gonna go toward this point, the 38.2 of the Fibonacci, which is 336. So if you want to play the correct trend, you want to play the downside. Now, of course, you can try to massage your way because the swing is so big. There may be in each one of these intermediate candle, there could be some huge swings, extreme to extreme. So if you have a flush on Tuesday, then the chance of a recovery is pretty high. So yes, you can play the upside after some extreme point. So playing the upside on the extreme point is statistically favoring. But if you're out here playing the upside on the first initial green candle because you think it's bound to recover, because you think, oh, it's time to go up, you are risking yourself a lot of pain. Even if this thing go all the way up here and you say, yeah, this is enough time. This is enough. They have proven to me that it's going to go back up. It looks that way, but I doubt it. I think there's just too much favor, too much notice to get this down to 38.2. I just think the weight and the damage has been done on Tesla that any rally at a point is gonna go down. So yes, you can ride these little waves up in. I mean, any day trader can massage their way to profit because they know how to play, or they know how to scalp. But I don't like playing that way. I like to trend. So for me, I don't play the 1 minute. I play the 5 minute. And at this point where there's so much volatility, I might even play the 15 minute, where I'm stepping further back and looking at it at a more, overview, a bigger picture instead of fine tuning everything. So playing these type of movements to me is, you can do it, but it's just not favorable in my opinion. You rather play the downside, and at any point they can get the smackdowns and the flush and the rip down and a sell off. So even, I mean, look at the pre-market. Wow, they show this off in the, I mean, the aftermarket. They sold this off in the aftermarket. I mean, that is crazy. This is just a lot of percent, a lot of control. I mean, some Tesla can be controlled, and I'm thinking they're gonna control this thing to the downside. I mean, look at the aftermarket. Wow. Yeah. So to me, lots of opportunities, but the bottom objective is the downside. Now, what happened if you happen to bot somewhere up near the top, anywhere from 450 to 500, right? What do you do now that you are here and you don't know if you should sell or you can obviously try to sell now and then come back at a lower point, right? But I mean, you can do that, or if you can hold it, you can actually make some decent money holding it and playing the options. So let me show you what that means. So don't play the weekly the option of near expiration. Don't play like September 11, September 18th, even September. Go toward like October 2nd, October. Go out there, okay, and take a round number like 400. Look at these 400 calls. Right now, the 400 calls at October 2nd give you 63 to 71 points for one option. So if you have 100 shares, you can sell one options of these calls and make yourself 6,000. I mean, you won't make 6,000, but let's just say 6,500 is where you sell it. So anytime there's a downturn, these calls are going to get less in value because at the current price at 418, if it goes down to below, if there's a mini crash or a flush or a smackdown anywhere where you see where is that at, where you see this type of behavior where it's gonna flush, you can buy back those calls at a lower price. So I don't know what the price might be, but it might be at 40 or 45. I mean, and then you make 2,000. So right there, you make 2,500, maybe even 3,000, depending on how much they're gonna smack it down. So along these strings, what you're gonna try to do is try to sell the calls at the top. So you sell the calls at the top, and then buy back the calls at the bottom so that you can hold your shares, whatever shares you have up here, you can hold them and you can play the options, the calls. Now don't play the puts because if you sell the puts and you sell them at the wrong time and it all of a sudden just boop, whoo, you're in a lot of pain. I mean, those puts are gonna be going up in value so much. So you don't want to sell them because you're gonna feel that pain of those puts going up in value. So what you want to do is you want to sell the calls at the upswing and sell them out in October, out here so that you can wait it out. If it continues to go up, if it continues to go up, you can wait it out, and eventually the downturn, you can buy back. So anytime, so wait for the downturn and then buy them back. So during the range, whatever extreme you see during the day, technically you can play it. You're gonna have to massage your way around this. So sell the calls at the top, wait for the turn down or the smack down or the sell off, and then buy back them calls every day. You can do that. So hopefully, if it swings something like this every day, let's just hope every day swing something like this, huge range but going down. Sell your cars here, buy back your cars here, sell your cars here, buy back your cars here, sell your cars here, buy back your cars here, sell your cars here, buy back your cars here. And along these lines, maybe you can make 2K. So that's two, four, six, eight, $10,000 you can make on every one of these turns. Every one of these extreme, you can make, 8, 10, 10 if you play it correctly, if you play it out. if you play too close, well, they're gonna take those calls and they're gonna take your shares. You don't want those. They can exercise your shares and take those. They can exercise those calls and take those shares, and you lose them when you really want to hold on to those shares. Because why would you want to hold them shares? Well, most likely it's gonna swing back up, and the reason why it's gonna swing back up is because Tesla is a favorite for Pump and Dumper. And Pump and Dumper is not gonna abandon their favorite stock. I mean, if you look at other pump and dump candidates, there are always companies where they do the pump and dump, and you can see these wicked go down, but then they'll pump it again. They'll pump it again, and Tesla is a pump and dump candidate that I think they're just not going to abandon. They're just going to go back to this guy. So it may not hit back to 500, and it probably won't hit to 500, but at some point, if you have the money, you can add to those shares. You can continue to play those calls, and you can ride the wave back up. If you dollar cost average, eventually, buying at the bottom, eventually it's gonna up to swing again. You can make money out of this, even though you bought it up here. If you dollar cost average all the shares you buy down here, eventually your shares from up here, the average will get closer to this level or this level, whatever, and then all these shares as they go back up, you will never gain the money from these shares, but these shares right here, when the profit from these shares will overall make you profitable, and then the cars that you exercise along the way, all those cars that you sold along the way, you can make money out of it. So, but you got to massage it, and you got to learn your lesson to not buy at the top. I mean, why are you buying up here in the first place? It makes no sense if you just look at this. Just look at the weekly charts. I mean, look at this weekly chart. Why would you buy it all the way up here? I have no idea. Um, I guess you see this and you say, man, I could have bought it here and made a lot of money. I could have bought it here and made a lot of money. Oh, I could have bought it here and made a lot of money. So I guess you can think it can go to the moon. But yeah, there's always other stocks that are going to be like Tesla. There will always be other stocks that are gonna be favorites among favorites. And eventually, even Apple to this day is still a favorite among favorites. I mean, Apple, you can see, wow. Any correction you see in Apple, I mean, it's not a pump and dump candidate, but maybe right here is a pump and dump candidate, but along these lines, that's a lot of money to be made. It doesn't behave like Tesla. I mean, these lines are stable on a weekly. These lines are very stable. I mean, this is the only weakness you see, but you don't see the same signature as you see with Tesla. I mean, Tesla does really the growth rate or the increase rate is more hyperbolic. It has this boom hyperbolic pump and dump signature. I mean, pump and dump signature, right? Just these are pump and dump signature. So stay away from Tesla when it's getting pump and dump. And yes, you can probably get it back. You can probably sell it now and get it back at a lower price. Or if you don't want to risk, just because there is no guarantee that this thing is gonna go down to this level. I mean, the way Tesla is at this point right here, it can go straight back to 500. It can. I can guarantee you that much. I mean, this Tesla is that much favorable. It is the golden child of stocks. The golden child of stocks can go right back to 500, no doubt in my mind. So by thinking that, yeah, I'm gonna outsmart everybody and sell it here and buy back here, there's no guarantee. This is just statistically what most pump and dump stocks would do. This is statistically what they will attempt to do. And what do I mean by them? The people who can control this market, the shorts, everybody who sees these lines, they know this is the target. But if a news article come out and say China is embracing Tesla as its number one EV vehicle for global warming reduction or whatever, boom, back to 500. I mean, news is gonna trump technical analysis every time. You cannot overcome technical analysis with news. News will override it. Boom, back to 500. So this is technical analysis. This is news. So what is the chances of news coming out like that? Not favorable, but it still can happen. You telling me it can't happen that some kind of news can spurt and run back to 500, especially when the bulls know there's so many shorts in here, there's so many eyes on this stock. Of course it can. So what you want to do is just massage your way back to the top, and it may probably never get back to 500. But if you massage your way by selling them calls, selling them at the high, buying them back at the low, selling them at the high every day. You can collect 2,000, 2,000, 2,000, 2,000 every day. Collect 2,000 and it'll add up every day of that. The more it goes out, the more you can collect. I mean, maybe you won't collect 2,000, maybe it'd be 500, maybe it'd be 600, maybe it'd be 1,000, whatever you can to massage it. The point being is that you can take income you can take money every day as long as the range is big, as long as the range is going to be big, because this is the initial phase of the pump and dump. And in the initial phase of the pump and dump, there's always going to be huge swing before it starts to stabilize. And at the stabilized point, it has two ways of going. It can go this way or it can go that way. And I'm not talking about a straight line, I'm just talking about the overall trend. And to me, the overall trend should be up for Tesla. The overall trend should be up. Now, how far down would it go? I don't know. It has a target right now at 38.2, which is 33 336. It can also go to this level. So along the way, you can massage. I mean, that's a lot of pain to be holding shares here at whatever this is, 450, and you seeing it all the way down here to whatever the 50-point retracement, which is 286. That's the 50% retracement, 286. So at 286, I mean, that's a big loss. From 450 to 286, that's a big loss. But you can still massage it, because along the way, as long as you're selling your cars, buying them back, selling your cars, buying them back, selling your cars, buying, and then, dollar cost average, start adding in every, 2 weeks, 3 weeks, whatever you want to do. Just add more shares along the way, because you don't know when the bottom is. Or you can just maybe wait for this first target at 38.2, then buy your first initial lot, wait it out, and if it gets to this next level, buy your second in well, this is your initial lot, this is your secondary lot, and then this is your third lot. So then you dollar cost average. If you get 100 shares here, 100 shares here, 100 shares here, your 300 shares, the dollar cost average would be, let's just say right here is your dollar cost average. Then when it runs back up, whatever the final value you decide to sell to get out, maybe you wait, who knows where it is. Maybe you wait where all this, the average of this is profitable, and then you sell it anywhere along that line. You making money overall. Overall, you making money. Plus, you adding these cars that you sold along the way. You making money. I mean, your first 100 shares, you can only sell one cars, but then this second lot of 100 shares, you can sell another car, and then this third lot of 100 share, you can sell another car. So that's three cars. 300 shares mean you can sell three cars along the way and massage your way out of this mess. And that's the only recommendation I can make, um, from a technical perspective, because Tesla is a beast. I can assure you that, and I would love to add shares to Tesla. I just don't know where, but I would love to add shares to Tesla in my 401k. Maybe I would do, wait for this level, 38.2, or, to do the initial lot, but I'm going to massage my way to it too. I'm not going to be holding it, right? I'm gonna massage my way, cause I sold out during this downturn, and so I would love to get back in and continue to play my 401k in Tesla. But the point being is that Tesla is a favorite, and it's gonna continue to move upward overall. Just don't know where that upward trend will begin, whether it be now at this point or at the 38.2, whether it be at 33.6 or the 50% to 86. I don't know. I mean, it's just, yeah. But yeah, that is my recommendation on playing Tesla. And good luck out there.